Question 1. In a title insurance policy, what is the primary difference between standard coverage and extended coverage? A. Standard coverage includes protection against all types of liens, while extended coverage only protects against certain types of liens. B. Extended coverage provides additional protection against certain risks not covered by standard coverage, such as zoning issues and encroachments. C. Standard coverage offers protection only for defects in the title that existed before the policy was issued, while extended coverage includes protection for defects arising after the issuance of the policy. D. Standard coverage is more comprehensive and includes all possible endorsements, whereas extended coverage does not allow for any additional endorsements. Answer. B. Explanation. Extended coverage in title insurance policies offers additional protections beyond what is included in standard coverage. This often includes risks such as zoning issues, encroachments, and other potential defects that standard coverage may not cover. The key distinction lies in the additional risks and types of protection provided, not just the types of liens or the timing of coverage. Question 2. Which of the following is true about the process of title examination? A. Title examination includes reviewing only the most recent deed and ignoring historical documents. B. Title examination involves verifying the chain of title and identifying any defects or encumbrances that could affect ownership. C. Title examination is solely focused on assessing the physical condition of the property. D. Title examination is not necessary if a preliminary title report has been issued. Answer. B. Explanation. Title examination is a thorough process that involves reviewing historical documents to verify the chain of title and identify any defects or encumbrances that could affect the property's ownership. It is essential for ensuring that the title is clear and that there are no hidden issues that could impact the buyer's or lender's interests. Ignoring historical documents or relying solely on a preliminary report can lead to incomplete title assessments. Question 3. Scenario-based. Mr. Smith is buying a property, and during the title search it is discovered that there is an existing lien on the property that was not mentioned in the seller's disclosure. What should Mr. Smith do to address this issue? A. Proceed with the purchase without any further action, assuming the lien will be resolved after the sale. B. Negotiate with the seller to have the lien resolved before completing the purchase or seek a reduction in the purchase price to account for the lien. C. Cancel the purchase immediately without seeking any further information about the lien. D. Ignore the lien and rely on title insurance to cover any potential issues that may arise from it in the future. Answer. B. Explanation. If a lien is discovered during the title search that was not disclosed by the seller, Mr. Smith should negotiate with the seller to resolve the lien before completing the purchase or seek a reduction in the purchase price to account for the lien. It is crucial to address such issues upfront to ensure that the title is clear and to avoid potential legal and financial complications in the future. Ignoring the lien or assuming title insurance will cover it without addressing the lien can lead to unresolved issues and complications in property ownership. Question 4. Which of the following scenarios would likely be covered by a standard title insurance policy but not by a typical extended coverage policy? A. A claim arising from a defect in the title that existed before the policy was issued. B. A claim related to an unrecorded easement that affects the property's use. C. A claim concerning a zoning violation that affects the property's value. D. A claim involving a mistake in the legal description of the property. Answer. A. Explanation. Standard title insurance typically covers defects in the title that existed prior to the issuance of the policy, including issues such as fraudulent deeds or undisclosed heirs. Extended coverage, on the other hand, often includes additional protections like unrecorded easements and zoning violations, which are not covered under standard policies. Therefore, defects existing before the policy, such as those addressed in a standard title insurance policy, are not usually covered by extended policies. Question 5. When performing a title search, which of the following is not a typical source of public records used to verify title information? A. County Recorder's Office. B. Property Tax Assessor's Office. C. Local Homeowners Association. D. State Department of Licensing. Answer. D. Explanation. The State Department of Licensing is generally not involved in the title search process. Instead, title searches utilize records from sources like the County Recorder's Office, which maintains property records, and the Property Tax Assessor's Office, which provides information on property taxes. Local homeowners associations may provide information on assessments and restrictions, but they are not standard sources for verifying title information. Question 6. Which of the following is a correct statement about endorsements in a title insurance policy? A. Endorsements are automatically included in all title insurance policies and provide additional coverage. B. Endorsements are optional additions to a title insurance policy that offer additional coverage for specific risks. C. Endorsements eliminate the need for a title search before issuing a policy. D. Endorsements are only available for commercial properties and not for residential properties. Answer B. Explanation. Endorsements are optional additions to a title insurance policy that provide extra coverage for specific risks not covered by the standard policy. They are not automatically included and do not replace the need for a thorough title search. Endorsements can be added to both residential and commercial policies to address particular concerns or risks. Question 7. In Washington state, what is a key legal requirement for title insurance agents when issuing policies? A. Title insurance agents must conduct a complete property appraisal before issuing a policy. B. Title insurance agents are required to disclose all known title defects to the buyer before issuing a policy. C. Title insurance agents must have a license from the Washington State Department of Financial Institutions. D. Title insurance agents must obtain written consent from all parties involved in the transaction before issuing a policy. Answer C. Explanation. In Washington state, title insurance agents are required to be licensed by the Washington State Department of Financial Institutions to operate legally. This licensing ensures that agents meet the necessary qualifications and adhere to state regulations. While disclosure of known title defects and obtaining consent are important, they are not specific legal requirements for issuing a policy in the same way as licensing. Question 8. What is the primary purpose of a title abstract in the title search process? A. To provide a summary of the property's physical condition and improvements. B. To document the current market value of the property for insurance purposes. C. To provide a detailed summary of all recorded documents affecting the property's title. D. To assess the current owner's financial ability to cover any outstanding liens. Answer C. Explanation. A title abstract provides a detailed summary of all recorded documents that affect the property's title, including deeds, mortgages, liens, and other encumbrances. This summary is essential for identifying potential issues with the title and ensuring that the property can be legally transferred without complications. Question 9. If a property's chain of title shows an unrecorded deed, which of the following actions is generally required? A. The unrecorded deed can be ignored as long as it is older than 10 years. B. The property's current owner should file a new deed to replace the unrecorded one. C. The unrecorded deed must be researched further to determine its impact on the current title. D. The title insurance policy will automatically cover any issues related to the unrecorded deed. Answer C. Explanation. An unrecorded deed needs to be researched further to understand its impact on the current title. Unrecorded deeds can affect the chain of title and potentially create issues with ownership or claims. Ignoring it or assuming coverage without further investigation could lead to unresolved title issues. Question 10. During the title examination, you discover a lien that was not previously disclosed by the seller. What should be your primary course of action? A. Immediately issue the title insurance policy without addressing the lien. B. Inform the buyer about the lien and proceed with the sale as planned. C. Resolve the lien with the seller before proceeding with the sale or adjust the sale terms accordingly. D. Assume the title insurance policy will cover the lien without further action. Answer C. Explanation. When a previously undisclosed lien is discovered, the appropriate action is to resolve the lien with the seller before proceeding with the sale or adjust the sale terms to account for the lien. It is crucial to address such issues to ensure that the title is clear and avoid future complications. Simply issuing the policy or assuming coverage without addressing the lien can lead to unresolved issues for the buyer. Question 11. Which of the following is not a typical element that a title search aims to uncover? A. Past mortgages and liens on the property. B. Unrecorded personal property transactions involving the property owner. C. Historical ownership changes and transfers. D. Existing legal judgments affecting the property owner. Answer B. Explanation. A title search primarily aims to uncover past mortgages, liens, ownership changes, and legal judgments related to the property. It does not typically include unrecorded personal property transactions involving the property owner, as these are not directly related to the property's title. Question 12. In Washington State, Which of the following is a legal requirement for a title insurance policy to be enforceable? A. The policy must be issued by a title insurance company licensed in Washington state. B. The policy must include an appraisal report conducted by a certified appraiser. C. The policy must be accompanied by a notarized affidavit from the seller. D. The policy must be registered with the local county clerk's office. Answer: an explanation. For a title insurance policy to be enforceable in Washington state, it must be issued by a title insurance company that is licensed in the state. This ensures that the company meets state regulatory requirements and is authorized to provide title insurance coverage. Question 13. Which of the following scenarios is typically covered by a title insurance endorsement? A. An issue with the physical condition of the property. B. An existing zoning restriction that was not included in the original policy. C. A claim related to the seller's failure to disclose property defects. D. A future property tax increase after the purchase. Answer: B. Explanation. Title insurance endorsements are used to provide additional coverage for specific risks not included in the original policy, such as existing zoning restrictions. They do not cover physical property conditions, seller disclosure issues, or future tax increases, which are outside the scope of title insurance. Question 14. When analyzing a title abstract, which of the following is a common defect that may be identified? A. An error in the property's legal description. B. A discrepancy in the seller's personal identification. C. A violation of local building codes. D. A change in the property's market value. Answer: A. Explanation. A common defect identified in a title abstract is an error in the property's legal description. This can lead to issues with ownership and property boundaries. Discrepancies in personal identification, building code violations, and changes in market value are not typically identified through a title abstract. Question 15. Which of the following would be a valid reason for a title insurance claim to be denied? A. A defect in the title that existed before the policy was issued. B. A title defect caused by an act of fraud committed by the insured after the policy was issued. C. An issue with the property's physical condition. D. An unrecorded easement that was discovered after the policy was issued. Answer: B. Explanation. A title insurance claim can be denied if the defect in the title was caused by an act of fraud committed by the insured after the policy was issued. Title insurance typically covers issues that existed before the policy was issued but does not cover issues resulting from post-policy fraud or misconduct by the insured. Question 16. Which of the following best describes the impact of a title encumbrance on a title insurance policy? A. Title encumbrances are always covered by standard title insurance policies without exception. B. Title encumbrances are typically covered by extended coverage policies and may be subject to exclusions in standard policies. C. Title encumbrances are irrelevant to title insurance policies and do not affect coverage. D. Title encumbrances are only covered if they are recorded within the last 6 months. Answer: B. Explanation. Title encumbrances are generally covered by extended coverage policies, which provide additional protection beyond standard coverage. Standard policies may have exclusions for certain encumbrances. Understanding how encumbrances affect coverage is crucial for ensuring adequate protection. Question 17. Mr. Johnson is buying a property where the title search reveals an old mortgage lien from a previous owner that is not fully satisfied. What is the best course of action? A. Accept the property with the lien as is, relying on title insurance to cover any future issues. B. Negotiate with the seller to ensure the lien is resolved or satisfied as part of the closing process. C. Cancel the purchase immediately without further discussion about the lien. D. Assume the lien will be automatically removed by the title insurance policy. Answer: B. Explanation. The best course of action is to negotiate with the seller to ensure that the lien is resolved or to address it as part of the closing process. Title insurance may not cover unresolved liens, and it is essential to clear such issues before completing the purchase to avoid future complications. Question 18. Which federal regulation is particularly relevant to title insurance practices and procedures? A. The Federal Housing Administration (FHA) Act. B. The Real Estate Settlement Procedures Act (RESPA). C. The Fair Housing Act (FHA). D. The Equal Credit Opportunity Act (ECO). Answer: B. Explanation. The Real Estate Settlement Procedures Act (RESPA) is particularly relevant to title insurance practices as it governs the disclosure of settlement costs and ensures transparency in real estate transactions. i.e., SPA includes provisions that affect title insurance procedures and practices. Question 19. What is a common reason for a title insurance claim related to foreclosure? A. The property was foreclosed upon after the policy was issued. B. The foreclosure process was not properly recorded prior to the policy issuance. C. The foreclosure was initiated by a non-legal entity. D. The policy does not cover foreclosure-related issues. Answer: B. Explanation. A common reason for a title insurance claim related to foreclosure is that the foreclosure process was not properly recorded prior to the issuance of the policy. Title insurance generally covers issues that existed before the policy was issued, including improperly recorded foreclosures. Question 20. Which of the following actions is NOT typically part of the title insurance underwriting process? A. Assessing the risk of potential title defects. B. Reviewing the financial stability of the property's current owner. C. Verifying the accuracy of the title search and examination. D. Determining the coverage and exclusions of the title insurance policy. Answer: B. Explanation. The title insurance underwriting process focuses on assessing the risk of title defects, reviewing the accuracy of the title search and examination, and determining the coverage and exclusions of the policy. It does not typically involve reviewing the financial stability of the property's current owner, which is more relevant to other aspects of real estate transactions. Question 21. Which of the following best describes the concept of a chain of title in the context of title insurance? A. The chain of title refers to the physical condition of the property over time. B. The chain of title is a record of all the property's tax assessments. C. The chain of title is a chronological sequence of all the property's ownership transfers. D. The chain of title includes all the zoning regulations affecting the property. Answer: C. Explanation. The chain of title is a chronological sequence of all ownership transfers related to a property. It provides a record of past ownership and helps verify the legal ownership of the property. It does not refer to the physical condition, tax assessments, or zoning regulations of the property. Question 22. In title insurance, what is the primary purpose of a title commitment? A. To guarantee the financial stability of the title insurance company. B. To provide a preliminary report outlining the terms and conditions of the title insurance policy. C. To offer a final policy document after closing the real estate transaction. D. To document the physical improvements made to the property. Answer: B. Explanation. A title commitment is a preliminary report provided by the title insurance company outlining the terms and conditions under which the final title insurance policy will be issued. It identifies any issues that must be resolved before closing and provides a snapshot of the title status. Question 23. Which of the following scenarios would most likely require an endorsement to a title insurance policy? A. A newly discovered boundary dispute with an adjacent property. B. A change in the property's use from residential to commercial. C. A difference in the sale price and appraised value of the property. D. An update in the local property tax rate. Answer: A. Explanation. An endorsement to a title insurance policy is often required to address specific issues not covered by the standard policies, such as a newly discovered boundary dispute with an adjacent property. Other scenarios like changes in property use, sale price differences, or tax rate updates are generally not addressed by endorsements. Question 24. Which legal principle ensures that a title insurance policy provides protection against claims for title defects that existed before the policy was issued? A. Principle of subrogation. B. Principle of indemnity. C. Principle of title assurance. D. Principle of precedent. Answer: B. Explanation. The principle of indemnity is the legal principle that ensures a title insurance policy provides protection against claims for title defects that existed before the policy was issued. It guarantees that the policyholder will be compensated for losses due to covered defects, maintaining their financial position. Question 25. Which of the following is NOT typically a responsibility of a title insurance agent? A. Conducting a detailed title search. B. Evaluating the property's market value. C. Issuing the final title insurance policy. D. Resolving any title defects identified during the search. Answer: B. Explanation. Evaluating the property's market value is generally not a responsibility of a title insurance agent. Title insurance agents are primarily responsible for conducting title searches, issuing policies, and resolving any title defects. Market valuation is typically handled by appraisers. Question 26. What type of title insurance policy would most likely include protection against potential zoning issues affecting the property? A. Standard title policy. B. Basic title policy. C. Extended coverage policy. D. Limited coverage policy. Answer: C. Explanation. An extended coverage policy provides protection against additional risks such as zoning issues, which are not covered by a standard title policy. Extended policies offer broader coverage, addressing specific concerns that could affect the property's use or value. Question 27. Mr. Thompson is buying a property and discovers that there is a recorded easement that was not disclosed by the seller. What should be Mr. Thompson's next step? A. Proceed with the purchase and rely on the title insurance policy to cover any issues. B. Negotiate with the seller to resolve the issue before closing the transaction. C. Cancel the purchase agreement due to the undisclosed easement. D. Assume that the easement will be automatically covered under the standard title policy. Answer: B. Explanation. The best course of action is to negotiate with the seller to resolve the issue before closing the transaction. An undisclosed easement can affect the property's use and value, and addressing it prior to closing ensures that Mr. Thompson is aware of any potential impacts or necessary adjustments. Question 28. Which of the following best describes an encumbrance in the context of title insurance? A. A physical improvement made to the property. B. A claim or lien that affects the property's ownership or use. C. A change in the property's legal description. D. An error in the property's tax assessment. Answer: B. Explanation. An encumbrance is a claim or lien that affects the property's ownership or use. It includes things like mortgages, liens, and easements that can impact the property's title. It does not refer to physical improvements, legal description changes, or tax assessment errors. Question 29. Which of the following types of claims is typically not covered by a standard title insurance policy? Options: A. Claims related to undisclosed errors. B. Claims arising from fraud in the title's history. C. Claims involving zoning changes after the policy is issued. D. Claims based on errors in the legal description of the property. Answer: C. Explanation. Standard title insurance policies generally do not cover claims involving zoning changes that occur after the policy is issued. They typically cover issues related to undisclosed errors, fraud, and errors in the legal description of the property that existed before the policy was issued. Question 30. In the title insurance claims process, what is the primary purpose of conducting an investigation? A. To assess the financial status of the title insurance company. B. To determine the validity and extent of the claim made by the insured. C. To resolve disputes between the buyer and seller in the real estate transaction. D. To update the property's legal description for the insurance policy. Answer: B. Explanation. The primary purpose of conducting an investigation in the title insurance claims process is to determine the validity and extent of the claim made by the insured. This involves verifying the details of the claim, assessing the impact on the title, and deciding on the appropriate resolution or settlement.